Good morning, my fellow traders. Hope you all enjoying your weekend. And it was yet another great week in regards with trading. A lot to learn, and that is something I'm going to mention in this weekend's video. Some good examples of the trades I've personally taken, and especially the importance of placing a right amount of stop loss, because there were times when the traders place a very tight stop loss, the price hits the stop loss and then pushes back up in their direction. That is the mistake we need to avoid if you want to trade efficiently. And talking about that, I'm going to show you two examples where exactly the price did the same thing. It goes near to my stop loss and then pushes back up. Especially one NatGas trade, one Forex trade, where I've removed my stop loss in a special occasion just to avoid hitting the stop loss due to the spread. I've entered that live trade in my live session. I'm going to show you how I placed the trade in my real account with the exact stops and target, and also one more commodity trade I've placed live in a live session. Some good trades we had, and I'm going to show you how we enter the trade from the major zones like copper, corn, palladium, and why I entered those trades and how nicely the zones played out. And after that, we're going to do analysis of NatGas, gold, silver, crude oil. And before I continue, I want to mention that I'm running a newer discount here, only 20% off this time. So if you are interested, scroll down, sign up, and then you can join this plan right here, one time, full trading course, and with that you get these two plans free. That is just one time, and there's a lifetime access to you with the Discord group for the full mentorship. So I want to start with this pair right here. Now, this is the pair, especially the CAD pairs, and these pairs, AUD, NZD, are the pairs with a very high spread. And sometimes what happens is the price never gone to your stop loss, and you see the notification from your broker that stop loss has been hit. And that is really frustrating. That is why the trading is full-time business. It's not something you place and just forget about and you carry on with your work. If you are a full-time trader, if you trade most of your time, then we need to manage these things as well. That is a part of your business. Now, example of that, a trade I took right here that never gone near to my stop loss, but on my broker's platform, you see that is 32 pips stops and target, and on my broker's platform, I trade with IC Market for the most of the Forex pairs, excluding commodities. Right here, you see that the price tries to hit my stop loss with a spread twice, once here and once right here. Now, if my stop loss was right here, then this winning trade would have become a losing trade. Right? So here on Oanda, because Oanda is really best if you are trading with Oanda, it's really good for the spreads, and that doesn't happen mainly with Oanda. But I trade with IC Market, is very good broker, and I've been trading with them from long time, never had an issue with withdrawals, deposit. That is something we need to look at especially. But these are some things we need to manage very closely. Even with Oanda, the spread of this pair is very high, and that can happen there as well. It did happen there on Oanda as well. But I want to show you a very good example so that you can avoid these mistakes as well. But let me show you when I placed this trade live in the live session, because whatever I do and whatever I teach you guys, it is exactly something I do it for myself. I trade when I place a trade, I send it to the members, and this was a trade alert that was sent to my members as well. I'm going to enter this trade with 1% of the risk. I might be sending this as an alert, but since you're in the live session, so now right here, limit order, and let's say I go for 1% of risk right here, that is 1% of my risk, and here I click on buy. So my order is set. Right here, as you can see, this is the trade alert sent to the members. I've clearly mentioned due to high spread on this pair, I will temporarily remove my stop loss due to rollover time around 10 to 11 p.m. UK time. I'll put it back once the spread gets back to normal if the trade is still running. Similar patterns found on AUD JPY, GBP CHF, GBP NZD. Exactly same pattern, the way I'm taking the trade, and it is exactly how I teach to my students. Every time the price pushes lower, I remove my stop loss because this trade run for a couple of days. Let me show you the screenshot of my notification from the broker. Right here, so as you can see right here, this trade run for 2 days. And right here, as you can see on the right of the screen, that was exactly my take profit right here in dollars. That is exactly like this. Now, here you can see this trade runs for how many days? 2 days and 2 hours. Exactly 32 pips right here. And right here, exactly 32 pips when my take profit was hit, and run for 2 days means I have to remove my SL twice, here and here. And if I wouldn't have removed the SL, then that would be a losing trade. So that is why it's very important when you take your trades, keep these things in your mind that winning trades can turn into a losing trade. So a good example, a trade alert was sent to the members, and I hope you have learned something out of that. With this example, manage your trades. rollover time here in UK is around 9:30 to 11 p.m. It is a time when if my trades are running, I remove my stop loss temporarily and then put it back once it's back to normal. Stop loss is very important, and always keep your stop loss, and especially the right amount of stop loss. Now, talking about right amount of stop loss. Now, right here, I've aligned my stop loss exactly with the ATR according to the rules I've teach to my students, to my members. And if you're my student in the MMTA full course, I have a different amount of stop loss for different type of strategy. For this strategy, my stop loss was right here. As you can see, right here, the price tries to hit my stop loss. Here, and then pushes back up quickly and hitting my take profit. Now imagine the mistake I've seen the traders is doing, putting a stop loss like this or just a little bit below the wick. Now everyone knows that we have a liquidity right here, especially the smart money there. They try to hit your stop loss, collect the liquidity, and then pushes back up. But if your stop loss aligned with your ATR, something I talk about in most of my videos, according to my ATR, according to my entry rules, my stop loss was right here. That is just a spread, not a candle. So it came near to my stop loss here, but never hit my stop loss because I was aligned. So you can save yourself by placing a right amount of stop loss. A good example is that right here. Let me show you one more example here, which is a NatGas example. Right here, a good example of NatGas. I don't want to go through all the trades and the screenshots I've already shown you, but here I want to show you how the price goes near to my stop loss. Let me show you the trade alert that was sent to the members first. Right here, as you can see, this trade was sent to the members and we have stop loss and take profit exactly how I've mentioned. Right here, I've just removed the trend line from here, but right here, we had two take profits, two stop loss, but main stop loss, the major stop loss was right here, this number. It is something for the smaller targets, but we keep one stop loss in case the first take profit is hit. You are out of the trade, or if you are managing it, you are out of the trade in trade one. If not, main stop loss is right here. So the first is 1 ATR, like I mentioned every single time, and the second is more than 1 ATR. Now the price was a bit higher when I sent this trade alert, but we had a chance when the price pushes back down without hitting the stop loss. And then you target 1 and target 2 entry was triggered. Now here, right here, what do you see? The price came near to my stop loss, and that is what we call placing a right amount of stop loss. Now you have seen the traders, they're putting a stop loss, something like this. And the take profit is so big, sometimes the price never reaches your take profit and then just pushes back down. So here my stop loss was according to the ATR, and that was the 100 points take profit, a very good amount of take profit here on NatGas, and that nicely hit the take profit. The trade alert was sent to the members, not just a trade alert, it is an entry that was already mentioned in my YouTube video as well. Clearly mentioned, but to the members I've sent exact amount of stops and target. Nicely hitting the targets, and the importance of putting a stop loss, right amount of stop loss is very important. And again guys, if you're learning my course and if you're thinking to join the course, how to place a stop loss correctly for every different strategy, it is a different strategy. And for aggressive entries, for double bottoms, for all the other strategy, I have different number of stop loss. So again, you have a chance, a discounted price here. If you want to get a lifetime plan, that is something you need to consider. If not, that's totally cool. Make sure you hit the like button for me so that you won't miss these daily videos. Now, the importance of a live session, which you get in this plan. You get live session once a week, sometimes twice a week. So exactly, we had an entry that happened right when I was doing the live session. Let me show you the clip from my live session. The sell stop order, 1 ATR, 26 cents here, 26 cents here. So that is your smaller target. Bigger target you can go. So that is a bigger target. Perfect. So you see how nicely we entered this trade. Now it is not an alien for you. These entries are not alien. I talk about this entry every single video, and if you're learning from that, I'm glad some of the students, some of the members even who follow me on YouTube, they are also picking up valid entries. So you see why I entered this trade. Nice downtrend, nice price action trading below 50 EMA. Right here, what do we have? A nice break above, nice pullback, and the reason behind this entry. First, we had an head and shoulder pattern on a daily time frame, which we're going to talk about in the analysis part of this video. So first, we had a price just broke below the structure level, right? The structure level was broken. Now, we had a retest of the structure level, again, right here. Let me make it more clear. Right here. This was the structure level that was broken. Now, when the structure was broken, I was looking for the retest. Now, behind my signals, behind my analysis, there are lots of hard work, lots of looking at the charts. And that is exactly what I do. Right here, bearish engulfing pattern. Happened where? At the structure that was broken. Happened where? Below 50 EMA. Adding all these two confluences, it is my valid sell signal. Entered right here and two targets, which is 39 cents. That is a good and big, half of the dollar almost, big amount of profits. And if you would have managed this trade, imagine how much that would have give you profits. Now, exact same entry I've taken in my crypto trade. Now, that is something I don't really talk about much in my videos, but let me show you the exact same entry because I teach you something that will help you in every other market. If you're trading crypto, stocks, indices, anything. Now, here, as I trade crypto, futures as well, BNB, I've taken this trade. Now I've taken this trade on 1 hour time frame. Right here, I've not connected with my BitKit broker. Otherwise, I would have shown you my real trade where it happens. But let me show you, give you a quick overview. Now, previously, this pair is trading below 50 EMA, and let me show you the structure level. Exact same entry we have shown you with the silver. That structure level, right? First, what do we see? After the consolidation, we had a break below the structure level, right? After the break, we had a pullback to the previous structure level that was broken. With that, we had the bearish engulfer. Happened where? Happened below 50 EMA. Entry right here, nice fall. After this fall, what do we have? A new structure level right here. Now, once we have a break of the structure level, what do we have? A pullback, followed by what? A bearish engulfing pattern. Now we had a liquidity here, and that is why I've kept my stop loss above. Another example of keeping a stop loss, aligning your stop loss correctly. I have a stop loss above according to the ATR and according to the zone. A liquidity here, kept it here, and you see that the price push up near to my stop loss. Never hit that because I was aligned with my stop loss. Eventually hitting my take profit. Here on this pair, I've taken nice profits. Now we did not have another structure level because price broke back above. So we'll see how this goes, and that is how I do my analysis and take my trades personally. Now I want to show you one commodity that nicely played out here on corn. Now it is not something that I've taken any trades blindly. For my trades, we have a rule. Rule is wait for the price to come to your zone, or wait for the price to give you an entry reason. For me, it is a zone from where I want to enter my buy trades. A zone report, a commodity zone report was sent to the members on 15th of December, just last week. And what do you see here? Corn broken above the structure level. Exactly same example I've just shown you previously. It was bearish, this is bullish. And once the price pulls back to this level, I'm going to enter my buy trade on smaller time frame right here. And exactly what I did. Here, the price broke above the structure level, right? We pull back to the structure level and forms what? Price forms what? A bullish engulfer here on 1 hour time frame. 1 hour time frame is something I go for minimum, and 4 hour is my main time frame to take my trades. Right here, bullish engulfing pattern happened on 1 hour time frame. Nicely hitting a massive amount of profits if we would have entered this right now. On 4 hour, what do you see? A morning star pattern right here. That also nicely, massively pushed up. So if you have been taking your trades on 4 hour or 1 hour, both ways the target has been hit, and both ways it has given you an entry reason, the bullish entry reason, which is right here, a morning star pattern. So exactly how we need to look for the entries, not blindly, but if the market is trending, don't go against the trend. Wait for the price to come and give you the setup. Here, the price was broken at the structure level. This was the structure level that was broken, right? After that, we had a pullback. Right here, a good level that pushed the price massively higher. Then we have copper. Now here, on copper, we were looking at two levels, one minor, one major. For the major level, I expect a very big bounce. Minor level, we can expect some good bounce that is enough to hit your targets. Right here, as you can see, we had a minor level below. I'm paying attention for the possible buy trades with entry condition. Now, what do you see here? Again, going back on 1 hour time frame. First bottom, pull back, second bottom, green candle, aggressive double bottom that nicely hit your 1 ATR targets. Now, if you want to manage to 1.4 to 1 reward to risk ratio, I'm still expecting a price to head up to at least 1.4 to 1 reward to risk ratio, which is something like this. So I entered two trades right here that hit my take profit. Stop loss is here. And sometime for the second trade, I keep my stop loss bit lower. So once you know the rules, once you know how to play with the market, you can tweak your rules according to your own self. But for that, you need to learn trading fully. So here, on 1 hour time frame, the entry happened and nicely hit the targets. We did not enter blindly, but we were looking at the zone. We were looking at the pattern. And that is how we need to do the analysis. Nicely hitting the target on this commodity as well. Now let's talk about one losing trade which I've took and sent in the group as well. So in the group we had 3 trades, out of that 1 losing trade. But losing trade doesn't mean that you stop following the rules, and that is a mistake you do. Once you have a losing trade, you get disheartened and you don't take trades next to get fearful because you have a losing trade. That is a mistake we need to avoid. That happens to me all the time, and that is a part of trading. Losing is a part of trading. Now right here GBP CHF, what do we have? A nice winners right here. So 2 winning trade, and then we had 1 more entry. This was trade alert sent to the members as well that time. And right here, what do we have? A bullish engulfing pattern that happens after what? That we had a break above. Right here we had a nice pullback followed by bullish engulfing pattern. That was my entry following all my rules. About to hit my take profit, but of course the news has happened. No, I'm not going to blame the news, because if that would have hit my profit, that would have gone in my favor. That is why if there's the news, I don't care, but I take my entries according to my rules, and that happened nicely, and that hit my stop loss. Totally fine. Look at this entry and look at the exact same entry. Above 50 EMA, nice trending market, bullish engulfer. Right here, above 50 EMA, bullish engulfer. So the third entry, if that didn't play out, that is totally fine. That did not play out. Okay, let's move ahead and look for another trade. Now I want to show you same trade. A to JPY, nicely pushing up, bullish engulfer. That did not play out. That's fine. Exit. I want to show you a NatGas example here. For the student, a shout out here on Owanda. Break above, pull back, these pull back, followed by what? Bullish engulfing pattern. That would have hit your take profit. Now these are the entries that don't send as an alert, but I leave it for you to learn. I've given you the rules of entries. I've given you the full course. Look for the 6 rules, and that happens right here. Here, that was an entry, and that would have hit your take profit. I've sent this as an alert right here, but I've not sent this as an alert. After hitting the second profit, we had a pullback. That was clearly mentioned in my videos as well. And we have a bullish engulfer. And if you're my student, you know what entry is that. Nicely hitting the take profit. Then we had GBP NZD. What do you see here? Nicely trending market. Pullback, bullish engulfer, nicely hitting the targets. Now this is a 71 pips. Now I teach my students to manage a trade either to the recent highs or to the level of resistance. If you would have managed this trade, if you have a strong trading psychology, if your mindset is strong, then you would have set your take profit right here. You see 265 pips take profit is insane. That one trade will recover all the losses which you had previously. A good example of that is right here. And then exact same entries. What do you see here? Euro NZD. What do you have right here? Swing low bullish engulfer. That nicely pushed the price higher. Swing low bullish engulfer here. Exactly same we had. The entry we took here on NatGas. Swing low bullish engulfer. You see the similarities. If one stop loss is hit, it doesn't mean you stop taking your trades. Try to manage your trades. Try to get better reward to risk ratio. But for the beginners, I recommend 1-to-1, so that once you are good with winning trades, doesn't matter if you're out at break even, but once you are not a losing trader, then start managing your trade. Learn trading, follow your rules, stay disciplined, and then the results will be awesome. That is why on the weekends video, I show you these results. The losing trades, the winners, how the zones played out, when the zones did not play out, all that I show you in the weekends video. Now, finally, I want to go through some indices. Now, I want to show you 2 reports right in front of you. The first was sent on 24th of November. At that time, I sent 2 zones. First, the level of support, which is right here you see in green. The level of resistance where the price was heading to. At the level of resistance, we were looking for the possible sell trades. Right here, you can see. Once the price hit the level, it will become an area from where I will be looking to enter my sell trade. And once the price hit my level of resistance, I've sent another report on 8th of December that now, as the price reacted from the level of resistance and heading now to a level of support, which is over green zone, now I'll be looking at the level below for my possible sell trades. Now, you see here the power. Right from this zone, bearish engulfer, morning, evening star pattern, whatever you want to call it, if you are taking your own rules. But I want to show you the power of setting your trades with a good reward to risk ratio. Now, from level to level. Now, if you have a strong mindset, from this zone, you just gone halfway. You see the power of rewards. You can imagine the reward right here. Just by moving your stop loss to break even, securing your profits. You know that you just have 2 levels, one above, one below. From here, you want to manage till this level. Keep pushing your price lower, right? Something like this. Keep your stop loss little bit above, or use EMA for your trailing stop. You see how nicely the price fallen down all the way from this level to this level, and you from all the way from this level, a big bullish engulfer on 4-hour time frame. Normally I enter a few pips below right here, and then that is my entry. Let's see how this goes next week, but it is an area that was mentioned in my last video as well for the possible buy trades. But on 1-hour time frame, the entry already has played out. Bullish engulfer ATR is what? 23 all the way from here. That pushed up more than 1 ATR half, actually 2 ATR, and that is better reward to risk ratio on 1-hour time frame. So depends what time frame you take your trades. On 1-hour time frame, the target has been hit. On 4-hour, that is an entry. You see, that was already sent. We were already prepared for this entry. Nicely reacted from this zone. Now, sometimes the price never react from the zones. For example, this pair, I had my zone right here for my entry. I never had a chance to enter this trade. Price never forms any sort of condition. Once the price hits your zones, you look for the conditions like double bottoms, like bullish engulfers, like pin bars. You see any condition here? But instead, we had a waterfall all the way, and that is why conditions are very, very important for your trading. No conditions means no entries. So let's wrap the first part of the video, and I hope you got a value out of the first part, and I hope you have learned something out of that. So with that, let's do an analysis with NatGas, gold, silver, crude oil. I'm also going to go through USCOCOA today. Here on NatGas, I'm going to go through the levels first. As the price has broken above this level, that was clearly mentioned in my last video that the zone has been breached. At this point, I'm looking for a valid trades. We had no double top here, means no entry here. The price forms a bearish here, bearish engulfer here, doesn't mean anything because that did not happen at my area of value. Instead, that is just a pullback. Now, as the price is broken above on a daily time frame that I've clearly mentioned in the last video, wait till the price break and close above this zone. And that has happened. And now we have two levels, one here and one above right here. Now on NEMEX, the level is a bit far, but on Oanda, the level is very near. I'm going to go through all the levels in a very short while. So first, we're going to look at this level. For now, pay attention to the level below, which is right here. 3.341 goes up to 3.606. We can have three type of entries here. Number one, the price pulls back to this level, forms bullish engulfers or double bottom. That is my entry. Double bottom is a less aggressive entry. That is a less risky entry as well. But if the price pulls back down, forms a bullish engulfer, that will be an aggressive entry. That's totally up to you how you want to enter. Sometimes the price never forms double bottom. It forms aggressive entry and then keep on pushing higher. So totally up to you what type of trades you want to take. Now here, that is first type of entry. Second type of entry is with the Fibonacci tool. Fib retracement from the high to the zone below. 50% can be your buy limit order. Stop loss can be below the zone. Take profit can be 1.618 retracement. This type of entry give you a better reward to risk ratio. For example, you entered right here with a buy limit order. Stop loss, you can keep it below. Take profit can be 1.618 retracement. That is 1.8 to 1 reward to risk ratio. So that is the second way of taking your trades, which is a very aggressive entry. Totally up to you if you want to go for it or not. Then we have a pullback entry. That is my favorite way of entering NatGas. The recent trade we took, I've just shown in the first part of the video. Then we have a pullback. Could be a deep pullback above 50 EMA, followed by bullish engulfer. That is a very good entry. For me, a strongest entry, pullback entry will be strongest here because we will have this entry in the zone as well. Then we have a bullish engulfer above 50 EMA. Adding all that will make it a very good entry. So these are three entry conditions I'll be looking at. Not selling as we are trading above 50 and 20 EMA. I will only take sell trades once we have broken below 50 EMA. Only then I'll start to look for my sell trades. Now, I'm going to give you the heads up here, the next zone, just in case the price pushes up dramatically. The next zone is right up there, which is quite higher, and that is the only level I'll be paying attention for the next counter sell trades. 4.933 goes to 5.365. Overall, I've been mentioning from last couple of months, we are bullish. One more thing I want to show you here on a daily time frame. I'm looking here on this platform because if the price moves here, it moves on the other platforms as well. We recently had a break of neckline of the double bottom major on daily, right? Break of neckline. We can see a push up, pull back, and then a shoot higher as well. That is something for the higher time frames trader. Coming back here on NEMEX, broken above the zone on a weekly time frame as well, right here. So that is a weekly level as well. Now the zone I've just mentioned is not a very strong zone. A strongest zone is right up there, but that is very high for now, just don't pay attention to those. For now, just look at the zone that has been broken. With the pullback, we are looking at this zone to take your buy trades. For now, strong bullish candle on a weekly, strong bullish candle on a daily, on 4-hour, strong bullish candle right here. Overall, in an uptrend, and these are the entries I've just mentioned you need to look for your condition. Fibonacci entries, aggressive entries, double bottom entries, or a pullback entries. We're just looking for your buy trades. Now here on Ovanda, a zone below that has been broken recently, 3.356 goes down to 3.237. A zone that is your trend continuation bullish zone. Same entries all the way from here, something like this. So 50% retracement can be your buy limit order, stop loss can be below, take profit can be 1.618 retracement. That is an aggressive entry for aggressive traders. Otherwise, pull back to the zone. Engulfers, double bottoms. Pullback entry could be a deep pullback to 50 EMA. Bullish engulfing pattern will be your entry. Now here on Ovanda, the next zone is not really far. Now going back here, I want to show you the zone above, from where the price has nicely reacted as a level of support in the past. If you go back and see, a level of resistance in the past, a level of resistance in the past. That is why I'm paying attention to this level. Now, don't get confused for your platforms. If the price, let's say, pushes up here and you are looking at NEMIX, it might push up, pull back to this level and then start to push up. So that is why I look at all three platforms, because most of you trade on NEMIX. I personally trade on Ovanda and Capital.com, and that is why I combine all three charts and look for the conferences. So, but if you are trading on your own platform, look at a single platform. Look for the entry condition I've just mentioned. So that is why here on Ovanda, I'll be paying attention to the zone above for a possible pullbacks, a scalp as well. So zone above is right here, 3.652 goes to 3.804, from where I'll be looking to enter my sell trades with bearish engulfers, or double top, from where we can see a possible pullback to this level and then buy from here. Let's say we have no pullback, price just pushes up, then it is an area from where we can start to look for the sell conditions. With that, if we have overbought as well, that will be a strongest entry. Now on Capital.com, we have a different situation. Here on Capital.com, I'm still looking at a possible double top pattern. Once the price hit this level, as you can see, this level has acted as a good level of support and resistance in the past. So that is why once the price hit this level, if you have a bearish engulfer on a daily, that is a sell signal, just a scalp, not a reversal. Sell signal from here, then we can get a possible retest of this neckline right here of the double bottom pattern. Sell signal, quick scalp here, exit here, look for your next buy trade here, and enter your buy trade here by keeping a stop loss below. So that is what I'll be looking at on Capital.com data. We have a rollover coming up, and that might adjust the price of NG1, might come back to the level below as well. So that is why I'm taking that into consideration as well. So here Capital.com, look for these entries and have these zones ready on your chart, which is 3.416 goes to 3.622. Once the zone is broken, only then I start to look for a buy continuation trade. So for now, keep an eye here, double top, and on 4-hour as well, which is right here. On 4-hour, the double top zone is not like that. It is exactly like this. On 4-hour, the price keep on pushing higher, bearish engulfer, that will be your sell signal, stop loss above, and you can go for the scalp. Otherwise, we are above 50 and 20 EMA. Like the other platforms, just look for a normal pullback followed by bullish engulfer and keep on taking longs till you are in this level above and price forms some sort of sell signal at the double top area. So that is all I'll be looking at here on these platform and here on natural gas. Look for your condition. Without condition, we are not trading. We are just gambling. Let's take a look at gold. Gold has now broken below the zone right here. Now, that would be a valid bearish pullback entry, but that did not play out. That is totally fine. But we are still below 50 EMA. At this point, we have a very likely chance the price hit 50 EMA, rejects from here. One candle can go above, that is fine. But if the second candle, an entry candle, goes back below, forms a bearish engulfer, I'm still looking to sell gold. So only sell trades, and that is my pullback entry bearish, not buying unless and until we have a dramatic push up, break above 50 EMA, only then I'll start to look for my sell trades. Overall, I'm still bearish. I'm still looking at the level below, which is 2515.12 goes to 2539.42 for the possible buy trade. So keep an eye. Bearish trade is something I'll be looking at just below 50 EMA. Here on silver, we are getting a possible retest of the zone that has been broken. Very likely chance the price forms a bearish engulfer. Now here, that would be a very good entry if that happens, because that the zone has been broken, the structure has been broken, exactly like this. Structure has been broken, bearish engulfer. Structure has been broken, bearish engulfer I'll be looking at. So keep an eye here. If you have a big retracement that happens below 50 EMA, bearish engulfer is an entry I'll be looking at. For my buy trades, I want to look for the level below, which is right here. The next major, not a major level, but a minor and a good level, I would say, is 27.56. 27.58 goes to 28.04, from where I will looking to enter my buy trades. For now, just sell trades below 50 EMA. Next up, we have crude oil. Crude oil just broke below the box and accumulation right here. Now, at this point, crude oil is not very clear. Unless the price breaks below this low again, I'm not taking any entries. So all I want to see a break below this low, then a pullback, then a bearish engulfer. Take my sell trades till the price get to the level below right here, these numbers in blue. So that is all I'll be looking at for crude oil, not taking any trades unless and until we have a confirmation that price is going to fall from here. We still have a chance that price will consolidate and then break above right here. If that happens, if we are above this box, then I'll start to look for my buying trades only. For now, we are below 50 EMA. On daily as well, that is why the more pressure is towards the downside and we can see a possible push down out of crude oil. For the pullback entries, of course, the break below this low must happen to take your entries. Finally, we have USCOCOA. Lots of noise here in USCOCOA. A break above the zone that I was waiting for the possible sell trades. No condition means no entries. Now, Fibonacci entry has been triggered as well, but if you are looking here, looking at a strong uptrend, that could be a correction. For me, the good zone will be right here for the possible good entries and a better reward to risk ratio. But if you're someone looking for the aggressive entries, now there can be a morning star pattern, aggressive entry, stop loss can be below, take profit can be to the recent highs, or the better entry will be on 1 hour time frame. On 1 hour time frame, look for double bottoms. If you have double bottom, bullish engulfers, green candle, 382 candles, all the rules must met. Once that happens, stop loss can be below and take profit can be according to the ATR I tried to teach you. So that is what I'll be looking at here on USCOCOA. Broke above the zone into trend continuation, possible double bottom. I'm waiting for on 1 hour time frame entry with the entry condition. And then once we have that, take your trades, exit. Don't hold on with the trades because we are not going to marry over trades. It's just a date. So exit your trades once you take profit is hit. Looking at this bullish candle, we have a good chance the price of USCOCOA will push higher, at least to the recent highs. So that's it for Weekend's analysis. Hope you enjoyed it and hope you got a value out of that. If yes, give the video a thumbs up, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Till then, take care.